Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, April the 9th, 2012. Market's been in a really strong downtrend for the past few days. We've been short and staying with it. We'll look at Canada's markets and the U.S. markets, all the U.S. markets today. There's some things you need to know. So right off the bat, we're looking at Canada's market, the TSX, or the Toronto Stock Exchange. You can see from back here we were long and finally get stopped out, and go long here, finally get stopped out, go long again, stopped out the next day, go short, and we've been short ever since. And we actually have advanced our stop. Yesterday it was here, or previous candlestick formation was here. Then we've dropped it down. Instead of going to the high of the candlestick, we've actually went down even closer to really keep a real tight stop here. Multiple reasons. Number one, no market falls straight down. Eventually you're going to get a bump back to the upside. In that jump back to the upside, whenever it does happen, expect later this week, when that does happen, I would be looking for another short opportunity. I'm going to have to find a signal, not just as soon as it starts going up I'm going to start shorting. I'm going to have to find the right signals, of course, but I would be looking for that, and I'm going to show you several different reasons for that. Another thing to bring to your attention here is, again, this overall trend that we've talked about and have been talking about for quite a few weeks now. You've got this major head and shoulders pattern form here, first shoulder to the head and the second shoulder, and now we've closed below the neckline. This is very bearish for Canada's markets. You can basically take the distance here and measure that distance out and then subtract it from the point of the breakout, which would be here, and you get an idea of how low you can go. However, just because you break down here, oftentimes instead of just shooting straight to that target, what will happen is you will break through, and then eventually you will jump back up here and test that neckline. And you'll notice that here it was support, here it was support, and typically on the test you will find it act as resistance. That's a great opportunity to start going short again if you get the right signals and everything else is in play. That's where I would be looking to go short again. Now you can keep pressing lower before you do that kind of thing. We've already shown you a couple of charts for the past few weeks that have actually followed this pattern. Felt about half of the target. Basically it'll fall about this distance before it reverses back to the upside. So we're getting in that range, but we're not quite there yet. Okay, again, like I've already pointed out, we have advanced the stop loss limit. We'll keep a tight stop on a short position. Like I said, you've got more downside potential here, but there's also potential for a bounce. You've had 4 consecutive days to the downside. That's average, but you get 5, 6, 7, you're pushing your luck, and you expect to jump back to the upside. Also, you'll notice this entire candlestick formation is trading well below the lower Bollinger Band line, as has the last 3, or actually all 3 of these here. That's again another sign that you're probably getting a bit overdone there. You're going to bounce back to the other side. Also, low volume on today's sell-off. Another reason to look at that and say it's probably not got a lot of strength to the downside immediately. Let's be perfectly clear here. I am not bullish in any way, shape, or form. I'm just cautious of a bounce, and so I want to get stopped out as early as possible if we get that bounce. The S&P 500 Large Cap Index, this is one that I want to be going short when we do get that jump back to the upside. And we'll have to wait for the right signals, of course. But we did not go short on this particular average when we went short on the others, simply because this one was making a higher series of highs and higher series of lows, and we didn't want to fight that trend. So we just let this one pass, even though we did notice at the closes of the candlesticks, though they were trending up, the momentum was not confirming that. And that was calling this actually a fake move here and a bearish divergence, basically. But we didn't just try to jump in there and call a top like we did with the NASDAQ or the Dow Jones Industrial Average. So this one we let pass. So the next time we get a jump here, what I want to do is look at it and say, okay, we got this low point here, we got a lower low right now. So we are trending down. What I want to see now is the next time we bounce, it doesn't have to happen tomorrow, but whenever it does happen, that bounce is going to be important to me. 2 things can happen. Either A, we jump up here and we break out to new highs, and if that happens, then the next pullback would be a buying opportunity, and you continue to test the highs. But if that does not happen, let me clean that up again, and you're unable to break out to new highs, then that's a short opportunity. You've got this move here, and if she comes up here, it fails to break out, then your next game is down. The whole trend has reversed from the uptrend to the downtrend. So the next move to the upside is really important for those trading stocks and those monitoring the markets. So that's why I'm really cautious right now. I'm watching the markets. And also, you guys noticed a while back I was able to call the market as being able to as a buy opportunity rather than a sell opportunity because of a scenario like this. Let me draw it out again. when your last candlestick or your last point, your last high point there was your high, that wasn't a previous one higher. When that's the case, you got this, then obviously this is a downtrend. But when you have a situation like we have now, let me get the tools out again, taking forever, and you have the previous point is the high point, you have to test it again before the trend is actually confirmed to be down. So that next jump there, don't be looking to be a buyer in that, be looking for it to determine whether or not you want to sell it. And that means the timing's got to be right, but also the candlestick formations, and you have to have a lower series of highs. This is the line in the sand that we want to watch here. And she actually has to break out of that point and go higher before I'll even turn my mentality now from a bear to a bull. Okay, so just keep an eye on this market right now. Okay, though we tried to call the top in Dow Jones Industrial Average, we were actually stopped out. We set our top off of this high point here. You notice you had this big run up here. Nice move here, and then you got this shooting star or inverted hammer at the top of the candlestick pattern, also on really strong volume there on the sell side. So we use that as our high point, and we marked our stop loss limit off of 1 cent above that. We took our short position here, and then we get this little jump up here that makes a higher high. So what am I doing? Well, I'm sitting here licking my wounds, waiting for the next jump to the upside, because the next one is not likely going to be a higher series of highs. So that jump, I'm going to be looking to short. Again, just like I basically showed you on the S&P, I'm showing you on the Dow Jones Industrial Average. Same overall theory. But just because the market will eventually turn around and jump to the upside, don't get all bullish and thinking it's the great bull market that I've been waiting for all my life. No, just read the charts. You're already breaking down. The next jump to the upside is your opportunity to get short if you weren't already. Unless you break out to the upside. At that point, you could turn into a bull. So you'll want to wait for that jump to the upside. Find yourself a good little advance there, so you have very limited risk. You keep your stop, of course, at the previous high. So you'd be shorting in this range right here. That would be fine. So just keep an eye on it. We'll update you every single night whenever we see the opportunity to take in a short position. We'll call you on it. One little side note here, looking at Japan's iShares at EWJ. This is the only chart that we saw potential, or that we actually recommended potential trade on alongside there. We saw a little potential on the FTSE, but this is the only one that we actually put an arrow on and said, yeah, this is where to keep my stop and so forth and so on. However, this one gapped down at the open below that stop loss limits. Therefore, you never should have took the trade. If you are in it, then there should be no reason to be in it. You should exit the trade. Like I said, once they gap below the stop loss limit, then they're showing you that they in fact can go lower. This in fact was not the bottom, and therefore that totally eradicates the whole strategy behind the trade. So it's over. Another thing you're going to notice, I should probably show you that, but in a lot of the markets, we've been talking about this support line that we keep finding in the major markets. Well, this breakdown right here is kind of just destroying that concept. So keep an eye on this market as it's growing weaker, not stronger. Not just Japan, but the U.S. as well. The Nasdaq continued its slide, as did the overall markets, and we have taken our stop loss limit that was up here, and we've simply advanced it on down to here. This blue line indicates. Remember, these charts are always kept on our free website at perfectstockalert.com, updated every single day, where you can see the advances of the stop loss limits, new positions that we see, or new trade opportunities that we see that might be out there. So you guys can check them out whenever you like. I will update a couple of the, actually probably a lot of the charts on the global markets, including the FTSE and DAX, so forth and so on, this evening, so you can check them out on our website. Let me show you what it's at. Before I do that, let me show you the Russell 2000 Small Cap Index here. This is one of those things you're going to learn to have to watch out for whenever you got an advance going on, and I've done it many times in the past. Like you have this move over here, big move to the upside here, a big gap below it, another one right here. Whenever you start to see that, I start, issuing the warning bell, saying, you know what, that's really nice that you're making a big move like that. However, those gaps tend to get filled when you've got a whole bunch of them below you, especially large ones. That just increases the odds of them being filled. So you have to really keep a tight stop on it. Well, when you fall into the downside and the exact same thing happens, I'd be an idiot not to warn you of the same thing. So you've got this move to the downside here, big gap right there. Another move to the downside here, no gap, and then another big move to the downside here, another big gap right here. So obviously, I'm going to warn you and say, look, this big move to the downside, it's nice and all, it's nice that we're making money on this. Advance your stop, keep a tight stop, because eventually you're going to turn around and you're going to start to fill some of those gaps, which will be fine. I'd probably use it as a short opportunity if it gets high enough. But in any event, I just wanted to warn you guys about that, all right? Okay, if you go to the free website at perfectstockalert.com and you're looking for my my notes on my charts every single night, you can go right here, just mouse over the market analysis videos, and then right here, chart notes, click on that. It'll take you to all the charts. I think there's 17 that we monitor and we update every single day. So there's any chart you want to see, gold, silver, the dollar, oil, you name it, basically cover it for you guys. So they're all there. You can check them out whenever you'd like, and like I said, I will update some of them tonight. Alright, God bless, take care, please share our videos online, refer a friend, and I will see you all tomorrow. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.